I think a lot of people right now are generally frozen. And to some extent, I guess I can't blame them. There's so much information out there that's kind of contradictory. There's the interest rates. It's high. Could it go higher? Could it go lower? Housing prices have gone down in other markets, but they haven't necessarily here in the Triad. They've gone up here in the Triad. I mean,
right.
It's just there's so much conflicting data. People are just like, what do I do?
That's it.
So how do you talk to me a little bit about that? I think there's also that fear of a mistake in there as well.
Yeah. Oh, for sure. Yeah, man. You're 100% correct. I mean, it's our design, right? Freeze, run.
Yeah.
That's it. The fight or flight, right? We're all over the place. So here's what I found. When you give people the correct information, the decision really becomes easy.
Okay.
When you have the information and you're confident in that information, and not only the person confident in giving the information, but the person that is receiving it also finds that confidence as well. So, I guess to put it this way, if I said to you, Keith, hey, here's a quarter, you give me a quarter, and I'm going to give you $1 back.
Easy.
Yeah. I mean, I think most people would be like, yeah,
done.
Let's do that a few more times. Actually, you'd probably be like, could we never stop trading? Like, could we just keep doing that for like ever, Jason? Give me, I'll give you a quarter, you give me $1. Yeah, I like that. So, and when we look at the housing market, it's actually somewhat of the same kind of trade, but we don't look at it that way because it's a bigger number, and the bigger number freaks some people out. And so, think about this, guys. If you bought in the Triad, if you bought a 3-bedroom, 2-bath home in 2013, the average price was about $140,000 for that product. About a 1,500 to 1,700 square foot ranch, 3-bedroom, 2-bath, just your standard house. Nice little starter ranch home. Today we could sell that house between $240,000 and $260,000. The exact same house.
Nice.
10 years later. That was 2013, to 2023, guys. So I think people would say, man, Jason, that's a pretty good trade.
Yeah,
I mean,
I'd take it.
That's a pretty good trade. That's not terrible. Now, compared to the person that was renting in 2013 and still is today, they have had none of that upside, and actually. It's even really probably been worse because I would be willing to bet that their rent actually has increased from 2013 to what it probably is today. It's probably went up. There's very few professional property owners that I would say maybe you're renting from a family member, but if it's an apartment complex, I can assure you the rent has went up from 2013.
Especially in this market here over the last couple of years, it's been astronomical in some cases.
Absolutely. And so if you think about that and you look at those numbers and you think about, wow, okay, so I've been doing this for 10 years and I've gained nothing. And now look at this though. The person that bought, you've gained equity, almost $100,000 or maybe even $100,000. Your payment actually is probably lower because in 2013, the interest rates were, guess what, Keith? Almost 7%. How about that?
Imagine that.
Imagine that. And so now you went through the glory days of the 3s and 4s. So surely you refinanced your house in that 10-year period of time. So not only did you probably refinance it, you probably went from a 30-year loan to a 15-year loan at a much lower interest rate. So you eliminated 50% of your debt time because you went from a 30-year to a 15. Your payment was probably, I don't know, $1,400. It probably went down, to $1,000 and it went down a couple $100 and you reduced the time in half. You went from a 30 to a 15. That was a lot. I think people would say, wow, that was a really good trade. That was a really good idea.